All right. Good afternoon, everyone. Again, this is Joe Bicella here at Chaikin Analytics, and I want to welcome you to our presentation of Profit During This Extraordinary Earnings Season, a personalized walkthrough featuring Marc Chaikin. Throughout our webinar, please feel free to submit your questions using the Q&A window. That'll be available in the upper left-hand corner of your screen. Also, remember that we are recording today's presentation. We're going to make a recorded copy available, and we're going to email this out to everybody once we're finished up here today. Now, to get us started, we actually want to go ahead and just show you a quick video clip from Marc Chaikin last week. Marc was featured on CNBC for an overview to provide his outlook for 2017 as well as for earnings season, which played prominently in his commentary. So we're going to get started with that, and then we're going to go ahead and bring on Marc Chaikin.
I think that this transition from a Fed-driven bull market to an earnings-driven bull market is going to continue in the second half. I think the second quarter earnings that are due to start coming out next week are going to be very positive. And we've got some events in the financial sector which I think are going to help mitigate the weakness in tech that we saw last week.
The jobs market, is it strong? Is it full employment? Where are the wage gains? Are those coming? Will that give it another leg up to the markets, or is it still not what it appears to be in terms of people working a couple of part-time jobs and the participation rate between, not baby boomers, but people that could still work? Is that still too high? People not in the workforce?
Even though these numbers are coming from the government, which always make them suspect, I'm a big believer in what we've been seeing in the unemployment numbers and rising wages in the jobs report. I think this is very healthy. It shows that the economy is growing, the labor market is tightening, and I think this is good and suggests that we've got a strong economy that we can count on in the second half.
Hey, Marc, it's Rebecca Patterson. Good morning. So you've got
Rebecca.
This amazing background in your company in terms of looking at dashboards and indicators to help you figure out your view on the market and specific companies and sectors. Is there one or two indicators you're looking at now for the rest of the year that if they don't work out as planned, you change your view? Right now, you're fairly constructive, I believe, on cyclicals going into the second half of the year. What would make you change your mind? Is it the yield curve? Is it something more technically driven? Inflation? What are you really focused on the most?
Well, Rebecca, I think the yield curve is an interesting place to start. It flattened out over the last 4 weeks, and that spooked everybody. But the reality is that a flat yield curve that doesn't invert is actually bullish for the stock market going forward. And we saw the beginnings of that last week as interest rates started to move up. What would spook me is if second quarter earnings disappoint analyst estimates. We've had a whole string of not just earnings surprises, but sales surprises. And that's one of the key factors in our multi-factor quantitative model, the Chaikin Power Gauge rating. So I'd be looking very closely at both how companies report relative to Wall Street estimates and also guidance going forward. You've got a lot of companies that are benefiting from a weak dollar here. You saw the beginnings of that with Nike's report on Thursday, where their international business really carried the company to better than expected earnings. So I'm watching analyst estimates, the trend of estimates, and they typically key off earnings surprises. That's why I'm so optimistic on the market here with a target of 1550 to 1600 for the balance of 2017. I think earnings are going to carry the market.
Thank you, Joe, and welcome everybody. In this afternoon's webinar, we're going to be looking at how to find opportunistic, speculative buying opportunities during earnings season. We're going to go through my checklist for supercharged options profit. Now, I'd like to start out to ask you this question. Are you thinking about a bear market? Is a bear market built into your strategies, or is it stopping you from trading? If you are thinking about a bear market, please type a big B into the question box. That'll give me a little bit of a flavor for what the audience mentality is. If you read our weekly market insights, you know that we're still bullish, but we haven't had a 5% correction since last July, so we're long overdue for a bit of a pullback. But let's take a look at the two major markets here. The S&P 500, the large cap market, This is the SPIDER, the ETF that is the most actively traded instrument in the US markets. And as you see, we've been in a very nice uptrend channel, but Chaikin money flow has remained strong through this 2.5-week pullback. And we're still holding that uptrend channel. And the Chaikin money flow, as most of you know, measures institutional buying and selling. It's also available on stockcharts.com. And based on how Chaikin money flow has reacted during this market, we think that we'll probably hold support levels at 2390 to 2410. But when you look at the NASDAQ 100, the triple Qs, totally different picture. And the reason is that tech stocks have broken down. Even though the S&P 500 was dominated for the first 6 months of the year by the FANG stocks plus Apple and Microsoft, which accounted for almost 40% of the gain in the S&P, the NASDAQ 100 has been powered by tech stocks and biotech, specifically semiconductor and other high energy tech stocks with good earnings, by the way. This is not 2000, in my opinion. We're not in an earnings bubble, or an internet bubble rather. So what I've done here is I free-handed a head and shoulders pattern. As those of you know who follow my colleague John Schlitz and his morning insights, head and shoulder patterns are very predictive, and broke below that lower neckline on a head and shoulders pattern. So the triple Qs are clearly in a pattern of having broken the head and shoulders neckline, and also you've got a series of lower highs and lower lows. So this is part of the market that's likely to underperform. I don't think we're heading into a bear market, but the triple Qs are likely to underperform. But let's say you're concerned about a July-August decline. Well, in a decline, you want to use put options to try and profit or protect your portfolio. So we put up two examples derived from the options play module that Tony Zhang created. On the left are three possibilities for playing the downside in the S&P 500 and the SPIDER ETF. You could either short the ETF, cost you $24,000. You could buy a put option, in this case with the index at 241.59 this afternoon, suggesting the August 242 put that expires on August 18th. And then a more attractive alternative, a vertical put spread. And most of the time, the vertical put spread has a higher risk-reward ratio and therefore is rated more highly by options play. Now, as we're going to see later, we're going to look at some put buying opportunities or spread opportunities because we're in earnings season. Volatility is very high during earnings season, a lot of uncertainty. But if you're using the Chaikin power gauge as your GPS, you take away some of that uncertainty, because stocks with bearish power gauge ratings are twice as likely to report a negative earnings surprise. Stocks with bullish power gauge ratings almost twice as likely, based on our research, to report a positive earnings surprise. So there's a lot of speculation in the media, and it's really important to have something reliable to tell you whether a stock's likely to beat earnings estimates or disappoint. And then you can find winning options trades in options play. So here's an example of that in living color, happening as we speak. On April 9th, in our weekly market insights, we said stocks are marking time, waiting for earnings season to begin. Well, that's happening now again, just 3 months later. And we recommended 3 auto parts retailers to sell on strength: Advanced Auto Parts, AutoZone, and O'Reilly Auto. The group was weak, and these stocks were all at or near 52-week lows, again with the market at a 52-week high. We said to sell these weak retailers on rallies of 2 to 4% over the short term. So here's your example. We made Advanced Auto Parts our bearish stock of the week. You got that rally into the earnings report in May. Negative earnings surprise, overbought sell signal. That's that wonderful 2 to 4 week time window. I'm sorry, 5 to 10 day time window when that options trade really pays off big. Auto parts stocks were down 10 to 20% in one day. So here's an example of how we help you find them. Again, knowing that there are opportunities is one thing, knowing how to find them is what's really important. So for a webinar that we did in mid-May, we showed a backward look at our earnings reports, which are in our weekly market insights. And we were looking for O'Reilly Auto and Helmerich and Payne in that weak energy sector to report that week of 424. But we show you the power gauge, which tells you to expect a bearish earnings surprise. And then about a month later, just before the week of May 22nd, we were looking at a report from Advanced Auto Parts. As you'll see in a minute, O'Reilly had already reported a negative earnings surprise. That's why group strength is so important. And Best Buy with a bullish rating was due to report. So here's O'Reilly. This is where we wrote the market letter. This is that 3 to 4% rally, 2 to 4% rally. Bearish earnings surprise, the stock drops from 265 all the way to 235. It then rallies again magically to 250. Wall Street never seeks to amaze me. Great opportunity again to do a put spread. Drops again, gaps down to 228, rallies to 245. Third opportunity to sell. And then look what happened yesterday. The stock went from 218 all the way to 178. It was down 40 points, almost 20%. This is what happens when you use that magical formula of the dynamic duo, industry group weakness, some negative money flow, negative earnings surprises. You can make an awful lot of money in put options. Now, O'Reilly reports on July 26th. If you get a bounce in O'Reilly, and this time it may not bounce so quickly, our earnings indicator is telling us to expect a negative earnings surprise. Analysts are cutting their estimates for the second quarter. Now, back in May, when we were aggressively bearish on the auto parts retailers, for a webinar I did on May 25th, I seeded the discovery engine with Advanced Auto Parts. You see why on the previous charts. It came back with the suspects that you would have hoped to see, AutoZone and O'Reilly, which was 240 on the way to 180 and below. Macy's, other retailers like Target, but it also suggested potential swaps. So you want to avoid these or look for put buying opportunities on rallies. But if you wanted to stay in retailing, it was suggesting Best Buy as a potential swap out of Advanced Auto. And Best Buy was due to report earnings 2 days later. So I featured this on the webinar using a bullish vertical call spread. Here's what Best Buy looked like on that webinar. You had just had a buy signal, an oversold buy, new 8-day low. Dynamic duo was in play. That's your directional edge. And the company was due to report earnings the next day. So on the webinar, we suggested, based on options play, a bullish call spread. This was on May 24th. Buying the 50 call, which was about $1.30 in the money, and selling the 57 call against it. Now, in this case, because this was an earnings play with earnings due out the next day, we went for the shortest duration spread possible, the June 2nd expiration. You paid $247. It was worth $1.30 because it was in the money. And it had all that potential, $700 potential, take away the $247 cost, profit potential of $453. That profit potential was realized the next day as the stock spiked up from 51.30 to 59. So you realize that profit in 1 day. Now, this doesn't happen every time, but when you're seeing returns like that, high returns of almost 200% in a day, you can afford to take some small losses or some bigger losses, knowing that you only have to be right 50% of the time to come out a big winner. And with the options play probability-based ideas and Chaikin analytics, your win rate should be higher than that. And with that, I'll turn it over to Joe Bacella to wrap up the webinar.
All right. Thank you very much, Mark. So let's go ahead and walk into some of the last parts of the webinar that we wanted to cover today. Thank you all very much for joining us. I know we were just kind of through this webinar together. We had the idea of doing this on Friday afternoon just because we have earnings season coming up and it's really expected to be a pivotal time. So we wanted to throw out a little bit of extra content out there to help you guys over the next few weeks. I know this week is big. You can see that I have the XLF on my page here. Given that on Friday of this week, and as Mark noted, of course, in his insights, we're going to start with financials this week, and it's really going to set the tone for what to expect going forward. And obviously with positive stress test results, which I know was the big topic from last week, we're expecting some positive things going forward. Now, I'm going to show you a few different quick ways to find some ideas, but I should say also, if you have any questions at all, make sure to take advantage of that Q&A window that is available in the upper left-hand corner of your screen. The chat room is also there. I know we have a small group today, so feel free to use the chat room or the Q&A window, whichever one you want. I'm sure a lot of you have some stocks on your minds. I'll be happy to go over some individual stocks with you. If you have any questions, again, any questions, comments, preferences, go ahead and chat in. What I'm going to do here is start with the financial sector here, actually. It's a group with obviously plenty of opportunities here, lots of bulls, 33 bulls and 3 bears. And again, all of this on the heels of a strong quarter and even just recently those positive stress test results. So Mark showed you the calendar of earnings ideas. Once you have a list, I'm going to show you another list in a moment. Once you have a list selected and you're looking for some ideas, just simply select that list, have the stocks appearing in your column, and then just make your way up to the upper right-hand corner, go to Portfolio Health Check. And if you scroll down in this report's primarily helpful for your portfolio management, some perhaps longer-term positions, but the main thing here is to help you stay on top of any stocks that are reporting. And you're going to see the first few that really stand out to us: Citigroup, PNC, JP Morgan, Wells Fargo, all of them reporting on the 14th. So when we jump back into the program, the one that really, I looked at each one of these before, and you can see JP Morgan in particular, just like Mark was mentioning for that overview for the major indices, great trend here of money flow leading into earnings. And when I look closer, the overall power gauge rating, of course, has a bullish rating, but the earnings here also has a very, very strong rating. So a lot of key content. These are the main factors that we want to look for here, and this is how we're going to try to find some great opportunities leading into Friday. So there's a few other opportunities available. I did want to dive into a few other ways to find ideas, though. Sticking with the panel on the left-hand side of the page, one of the best groups that you can utilize right now can be found under Chaikin Hot Lists. And I'm going to make my way to hot lists here and going right to the group, as you would imagine, for earnings. So any kind of earnings hot lists. If I select that and then make my way down, there's a few different opportunities here. Any kind of estimate revisions, obviously bullishly, any bearish ones as well. We saw plenty of great bearish opportunities too a few moments ago. What I'm going to do here is I'm going to look at the bullish estimate revisions group. And I'm, again, going to focus on some of the more bullish ones. I see that there's at least one bullish stock here, VNDA. With pharmaceuticals obviously doing very well recently. I'll take that sector momentum. Great trend here of money flow. And again, I see a stock with a great rating for earnings. The stock reports, I'm going to hover my cursor over EPS, July 26th. So this is one a little bit further out. This is one that you're going to have some time if you want to avoid volatility crunch. Which I know is a big concern for a lot of options traders. A lot of what you're seeing here, I should really emphasize, this isn't just for options trading. We know a lot of you are just looking for strong opportunities to buy beforehand, and that's perfectly okay. However, I think a lot of this content overlaps and works with both. In either case, VNDA here, stock overall in great shape. Again, you still have about 16 calendar days before it reports. You've seen a lot of great trends here leading up and setting the expectation for a positive result following earnings season. So now, Mark, I did a great demonstration with those auto parts stocks to find a stock like Best Buy. So what I'm going to do here from this point using Chaikin Analytics is just take VNDA, since I like the stock so much. I'm going to go to the discovery engine. I'm just going to go ahead and plug in the stock, VNDA. And I'm going to go ahead and take a look at some other opportunities that are like it. So the discovery engine is really what we like to think of as our Netflix for stock selection. A lot of great opportunities here. And again, just like Mark showed a few moments ago, you're going to see those bullish rated stocks that are similar to VNDA. Notice how one of those main factors here happens to be bullish earnings activity. So I have that. But then also, if I'm looking to go the opposite direction, I can find plenty of bearish rated stocks, kind of bet against them. So I have opportunities here. If I wanted to switch out of the pharmaceuticals industry group, I could look at similar bulls, where again, we're going to look at stocks that are in a different industry group, but also are very bullish and have that strong earnings consistency factor going forward, just like VNDA. So these are some of the ways that we expect you to be successful with your stock selection during earnings season. If you do have any, I guess we'll do just a quick last call. If you have any follow-up questions, of course, we're always available. We're going to be hosting a lot of options-based webinars this week. You can reach us right at the top of the page here, just like go to contact the specialist. You can find more information about this. Also at the top, if you wanted to see that information directly about webinars, you'll find that at the top as well. So again, feel free to join us. Tomorrow, we're actually going to be hosting a session purely on idea generation. So options insight, this is going to be all about finding the right type of setup. We're going to go a little bit more in depth regarding some specific setups. We'll be hosting this tomorrow at 11 o'clock Eastern time. Just like all of our webinars, we are recording the session, but you can join us live just by clicking on register here. Again, that recording will be available at the top of the page. Just go to view all past recorded sessions. Another webinar that you may want to check out, depending on your experience level, we will be hosting on Wednesday, the second part of our options strategies series. So again, this is great for learning how to actually apply a strategy. If you are relatively new to options trading, if you consider yourself to be something other than an expert with options trading, you'll want to join us. This is going to be hosted by my colleague, Josh Midland, who's going to go over a whole variety of strategies, including just simple calls and puts, as well as scratch the surface of spreads. That'll all be covered on Wednesday at 11:30 Eastern time. So again, register here, or of course, check out the recording a few minutes once we're done, and you'll get all that information available to you. So with that question, with that said, if you have any questions, feel free to go ahead and chat in. If not, we'll just go ahead and wrap up here. Some last bits of functionality to address just before we wrap up. Let's see. I know the earnings hot lists here will be a great use. You'll find a lot of great information under those sectors. I know we're using the example of the financial sectors for this week, but obviously I know a lot of the sectors tend to report in groups. So the portfolio health check will be very helpful for you to stay on top of when a stock is reporting throughout the week. You can apply that portfolio health check, say, for technology, for example. We'll see how the Qs shape up over the next few weeks. Having a strong day today, but again, I can take the portfolio health check report, run this right through the program, and again, this will help seed some ideas. I can see it looks like I still have a little bit of time before any kind of tech stocks report. So certainly not this week, but again, we'll keep our focus on the financials. So, all right, everyone, we'll leave it there. We want to thank you very much for joining us. Have a great afternoon. We'll hope to see you tomorrow on our Options Insight webinar. But in the meantime, have a great day, and we will see you next time.